Sacco share capital. What is a share? A share is a unit of the registered capital or the issued capital of an enterprise that marks ownership. Saccos are established on a principle of member ownership or member owned and member controlled. So share capital being the smallest or a portion of the capital issued capital of a Sacco that each member is required in law and the bylaws of the society to pay for or purchase in order to acquire ownership. And control, because of the principle that Saccos are democratically member controlled. Why minimum share capital? On the basis of the law as provided for in the Cooperative Societies Act, which also establishes the primary structure of Sacco's bylaws. One of the key provisions or one of the key article or the law and the bylaw is the minimum share capital. Legally, every member is required to hold the minimum share capital, a prescribed number of shares with a par value that gives us the amount, which is the share capital. And that is on the principle of equality, that all members are viewed as equal in the Sacco, regardless of the amount of deposits that you have contributed or put in. We are equated by the amount of share capital, and that's why we are expected to at least put in the minimum share capital. But the law also sets a maximum. There is a way a member, upon realizing that share capital offers a good investment opportunity for the member in the Sacco, most members will build up their share capital. But in order to exercise or to unify, equate all members, the law puts a capping on the percentage of the share capital, paid up share capital of the Sacco that should be held by one member, so that in law, no single member can acquire control of the Sacco by virtue of their shareholding. And that is, the law expressly provides that no member shall hold more than 5% of the paid up share capital of the Sacco. So the maximum ceiling on share capital is 5%. So the other point is, can a member exceed the 5%? And the answer is yes. A member who purposes to build his investment in share capital of the Sacco, by virtue of this member is not aware of what sits in the Sacco account as share capital, can exceed the 5%. But once that is realized, some actions must be instituted, because in order to align or in order to align the Sacco is the requirement that no one should exceed the 5%. So what is it that happens when a member exceeds the 5%? Forget about the member being refunded the share capital, because by principle, share capital is permanent, core capital of the Sacco. And remember, just like registered limited liability companies, SACCOs do enjoy the LLC status. And for that reason, the share capital of a SACCO, just like any other company, cannot be refunded to the member. Cannot be refunded to the member, even when that member is leaving the SACCO, withdrawing or ceasing from the SACCO. But it can be transferred to another member only on cessation of membership. And that is a question that bothers many members, and especially when they leave a SACCO. But my main question for this one is, and because many of us bought the Safaricom shares, can you be refunded by Safaricom? The share capital that you bought. Can you be refunded by Kengen? The shares that you bought during the IPO? No. And what you are supposed to do is, you are supposed to engage the services of a stockbroker who shall sell the shares on your behalf through the stock exchange and give you the money. But because SACCOs are not featured in the stock exchange, you are supposed to engage on a man-to-man, person-to-person agreement with an existing member who shall buy your shares at a price that you agree. Then, upon payment of a small administrative fee, say mostly around 500 shillings, the SACCO will effect a transfer from your now closed account to the purchaser's account. So what are these specific actions that will come into play, or administratively the SACCO will carry out when a member purchases more than the 5%? Number one, that will call for an increase in the minimum share capital of all members. It will call for a review of the bylaw on the minimum share capital that need to be held by every member. And once ratified and registered with ratified or approved by the AGM and registered with the Commissioner of Cooperatives, then all members will be called upon to increase their share capital to the new minimum, except the member who has exceeded the 5%. But even if that member was called upon to increase, he has already surpassed the new minimum. So all members whose accounts will be below the new minimum will be required to increase their share capital to the new minimum. Number two, another approach by through the AGM resolution, the SACCO board can recommend capitalization of the dividends or capitalization of a percentage or a part of the dividends over a number of years in order to build up the share capitals to the new minimum. Capitalization means crediting or transferring your dividends to your share capital account instead of paying out to you as a member. Another one would require an adjustment to the core capital of the society, which is more or less as an increase, will bring out the effect of increasing the minimum share capital of the society. How is share capital paid? Or does the SACCO enforce the full payment of share capital at once? SACCOs will give their members a number of ways to accumulate. Accumulation meaning that you are paying in bits until you attain the required minimum over time. Therefore, the answer is no. But the following are the ways that one can pay their share capital. And one is, you can pay in full. If you can afford and you choose to, you can pay the required amount in full. Number two, you can pay in installments or gradually over a period of time. Number three, it can be recovered from your applied qualified loans. At that point, in some cases, and that is quite often, Saccos normally impose it as a requirement for certain types of loans or for certain threshold of loans that a member must have qualified by putting in the minimum share capital in order for them to be eligible to access certain loan products, especially the top-up loans. How much should one purchase? Remember, we have said that share capital is not refundable, it's not accessible, it's not redeemable, or even transferable, so long as one is an active member of the Sacco. You can only access share capital by way of transfer to another member in the event you are leaving the Sacco. And this one is after your other assets have already been administratively handled. You have been refunded your deposits, you have been refunded everything else. The last piece to close your account is transfer of your share capital. And in most cases it happens because it's not easy. I agree, out of experience, it's not easy to get around a person who would want to purchase your share capital, and especially if you want to sell it on a one-to-one basis, ratio of 1:1, like you want the entire amount paid to you. Mostly, many people would buy share capital at a value or at an amount lower than what sits in your share capital account. Many people would call it at a loss, but that is a capital loss, a paper loss, a capital loss. Because on the reverse, the other party will have gained what we would call a capital gain. And therefore, the question is, how much should one purchase? For purposes of transfer, there is no limit. There is no limit, because even if you purchased and exceeded the maximum set limit of 5%, that one, upon realization by their management or administration, it will trigger. It's not an immediate response. It will require an action plan to shake up the capital of the society in order to bring a balance, or in order to bring in an adherence with the principle, or to have the share capital within the required 5%. So for purchasing, and that is an opportunity that has been overlooked by many members Saccos, that there is an opportunity of investment when it comes to share capital of a Sacco. In this case, if you look around, the rates of return that Saccos are paying on their dividend, on their share capital, that is dividend, I've seen Saccos paying to a tune of 20%. An example is Nyati Sacco. I've seen Saccos paying 17%, Police Sacco. I've seen Saccos paying 18% and all that. Most Saccos are paying way above 13% when it comes to the dividends on their share capital. And comparing that to the existing money market funds, which stands at an average of 13%, 15%, 14%, it means that Saccos are paying dividends way above majority of the money market funds. While I'm not belittling the other attributes, good qualities of money market funds with regard to the accessibility, flexibility, liquidity, security, protection, the daily compounding of interest, and the like. But for the sake of the return, Saccos are paying out handsome returns compared to many market funds. What exactly happens when one has exceeded 5%? It's unified. There are just efforts, actions taken by management to bring to par the other members in order to contain this new purchaser within the required threshold of 5% in order to bring out the equality of all members. This one member in law should not acquire control in the society on account of their shareholding. Can it be used as collateral? Can share capital be used as collateral? Share capital cannot be used as collateral for your own security for any member loan or guarantee for another member's loan, because share capital is a protected fund in law. Liquidity or access. Can a member access his or her share capital? Again, on the basis of protection of the core capital of a Sacco, a member cannot access share capital so long as they exist as a member in the Sacco. But upon withdrawal from the Sacco or cessation, then this member can transfer or sell their share capital, and the Sacco effect a transfer from the account to another member's account. Can it be transferred? Yes. As you have said, and with accessibility, Sacco share capital can be transferred, but to existing members. Does it earn a dividend? Does it earn a return? Very true. By principle, share capital is a form of long-term investment in the Sacco and can be used as a form of retirement plan if one builds up their holding in share capital. And there are ways that you can build up your share capital account. Number one is by purchasing share capital of withdrawing members and at a discount. You are not regulated by the Sacco nor the law as to the price at which or the amount or percentage to which you buy share capital. It is on a man-to-man agreement, and in most cases, you can acquire huge capital gains in purchase of share capital. You can purchase at 30%, 40%, 50%. Currently, there are some Saccos that are operating share capital transfer desks to help members who would wish to sell their share capital. Number two, you can compound your share capital by capitalizing the dividends payout. Capitalizing meaning that you are reinvesting that money back to share capital through repurchasing share capital of withdrawing members. And therefore, a build-up. And if you research on Saccos dividend payouts, Saccos increasingly, hardly will you find a Sacco that has reduced its payout in dividends. They keep on improving over time. And looking at the current rates, assume a member who has a total of 2 million, 5 million, 6 million in their share capital account. And this is a Sacco that is paying out a dividend of 18%. 18% for a person holding 5 million, that would amount to about 900,000. 900,000 as dividend. I know there is a 5% withholding tax. Instead of consuming this amount in entirety, you transfer the amount into a money market fund as your consumption account. Then you make monthly drawdowns over a uniform amount. That means you divide 900,000 by 12 months. Which means that as you continue drawing down and consuming that dividend payout, the balances are also accumulating interest in the money market fund. A nice way of managing your retirement. Therefore, although this one I know there is a room for improvement in terms of education and training, information about management of share capital and other forms of investment with Saccos, it comes out as a viable investment option by Sacco members. Can one maintain share capital after withdrawal from the Sacco? Yes. If upon withdrawal from the Sacco and successfully being paid your other assets from the Sacco, and you are unable to get a person who can buy your share capital, one can opt to maintain their share capital account and actively get engaging with the Sacco for two reasons. One main reason why most members do not maintain their share capital accounts by the time they are withdrawing from the Sacco is that the amounts that sit in those share capital accounts are so small or immaterial. When you look at the dividend payouts, they cannot sustain those members. So the members opt to take the little money and use it. But a member who purposes to invest in share capital and has roughly $1 million sitting in that account, where $1 million means this person for 18% is getting a tune of 180,000, which on advice to put that money in a money market fund and draw down an equal amounts of 15,000 per month, that could substantially look like a retirement plan. And such a member would want to retain the account. So most members primarily waste away their investment in Sacco share capital because on the virtue of by the time they are retiring, by the time they are pulling out of the Sacco, the amounts that sit in their capital accounts are so small that the dividend payouts will not be sustainable enough. Then the other part is that the share capital account, on the basis of the amount that the dividends pay out, if you don't access that amount in a span of more than 3 years, the amounts accruing to that account in law, they are supposed to be transferred to the Unclaimed Assets Authority. Once members leave our Saccos, literally, there is poor communication or literal communication to those members. So in many cases, due to that, most members' accounts go unchecked. Their capital accounts go unchecked because they have already been transferred and categorized as non-important, dormant accounts. And so in many cases, even in terms of AGM and those management, such accounts are categorized as dormant accounts and very little communication is done to such members. But an opportunity lies with such members because if properly advised, that can be a good source of membership to the Sacco. What happens with maturity for a fund, or what happens when the dividend lay uncollected for more than 3 years in the Sacco? Already answered. Once you don't collect your dividends or any assets from your Sacco for more than 3 years, then that becomes property of the government, because in law, the Sacco will be required to transfer all those assets to the Unclaimed Asset Authority. Like it happens with money market funds would always keep in touch with their customers to avoid or in compliance with that requirement by the Unclaimed Assets Authority. The same with Saccos. Saccos need to have their game in how they relate and communicate with their active and dormant members, because dormancy status in a Sacco is by virtue that you have failed to contribute to the Sacco funds for more than a specified period of time. That could be more than 6 months. But that does not mean that I am unreachable or that member is unreachable. Saccos need to improve their communication to their dormant members. Thank you for your time. Thank you for watching that video. That's what I have for share capital. And let's continue investing in our Saccos.